Hello and welcome to episode 13 of the Talking Central Banks podcast with me, Karan Marishi. This platform is exclusively dedicated to everything central banking, monetary economics, and policy technicals for observers across the world. Today, we will be talking about the monetary policy challenges in Brazil, Chile, and other Latin American economies as part of our LatAm roundup. Our guest tonight is renowned LatAm strategist Sergio Godoy. Sergio has over 30 years of experience in financial markets and central banking. Since August 2023, Sergio has been the senior strategist at Larrain-Vial Asset Management. Prior to this role, he was the chief economist at several other asset management firms, including Tanner, Zurich Asset Management, and Euro America Asset Management. Moreover, he was the fixed income strategist at Voya Asset Management and worked twice at the Central Bank of Chile as senior economist and economic analyst. He is also a part-time professor at Adolfo Ibanez University, teaching courses in fixed income, derivatives, and international finance. Sergio is the former member of the Advisory Committee of Potential GDP, which is a high-level committee constituted by the Ministry of Finance, Government of Chile, for providing the potential GDP growth estimates. These inputs are in turn a key parameter for calculating the long-term government revenue in Chile. Sergio obtained a PhD in financial economics from Columbia University, where he was a research assistant for 2 years to Joseph Stiglitz, who won the 2001 Nobel Prize in Economics. Welcome to the show, Sergio.
Thank you. Thank you for inviting me, Haran.
My pleasure, Sergio. First and foremost, Sergio, what is the impact of geopolitical volatility on LatAm economies, especially in the light of fiscal pressures and mounting sovereign debt problems that we are currently facing?
Geopolitically, I don't know how to. Latin America is quite diverse in many ways,
Right, right.
because we have Mexico, for instance, one extreme, in my opinion, which is an economy very much integrated to the US,
Mhm.
basically in many ways it's like another state because of the whole supply chain integration that have been happening for a while, actually, for decades. Mexico, since the NAFTA signing in the
Right,
90s, has been integrated a lot. That's one extreme, I would say. On the other extreme are the commodity producers. Mexico is a manufacturing hub, a manufacturing power company. Sorry,
right,
country. But that's one extreme. And the other extreme are the commodity producers. I would say the smaller commodity producers like Chile and Peru, which is like we are very much dependent on China. Our main client is in the world is China because China is the main consumer of our commodity in metals, in particularly metals. I would say metal. Both now, gold is so fashionable, particularly in the
right,
case Peru is a big producer for gold, but and Chile copper, and you have that, yeah, and Colombia with oil actually, and Brazil, which is by itself a huge economy, which is
right,
also a commodity producer, but is much more than that. So it's a manufacturing hub too. Is
right.
like a big, uh, a huge country. So we're mixed. So geopolitically, I would say hey, we have not been affected so much by the US, if you ask me, on a overall, because Mexico has been able to navigate these complicated waters, we're living now quite well, in my opinion. Brazil has got into trouble, but that has been only political in a way, because Brazil is not so much integrated to the US. So the issue what's
Right.
going on with Bolsonaro, which is a good former president, very good friend of Trump,
Mm.
it's mainly political, but Brazil does not depend so much on the US, honestly.
Mm.
In a way, it's more like Chile, depend more on China, if you ask me, that more than the US. And
Right.
Chile and Peru, I would say, and Colombia, the smaller countries, I would say they have been okay, slightly affected, but not so much, honestly. We have been, because I would say the Trump administration choose has chosen to focus more on China, but China is slowing down anyway. I don't believe it's not affecting so much the economy, so it's indirectly has not affecting us in a way. And with the other wars, the Middle East, which is mostly an issue for Colombia, because Colombia is a producer of oil in the region. Peru too, but Peru produces little oil. It's mostly Colombia, Venezuela, obviously, but Venezuela is another. It's a different.
Right.
It's another problem. Nothing to do with the rest.
Mm.
So I would say, but that was it in a way. But I don't believe the region has, and we have benefit also, which has stopped now from the depreciation of the dollar. I would say it has been good for us in a way, but that has stopped lately. I would say
Okay.
since April, it was very insane when they have this big risk off in the world, and currency were appreciating, which was quite different to what happened in the first Trump administration when we suffered the appreciation of the dollar. In this case, it has been the opposite. So it has been okay for us, I would say. Okay.
So, household consumption has remained healthy in most LatAm economies, and GDP expansion appears to be higher than the long-term averages. What are your views on this?
Well, consumption, I believe Latin America now is not such a poor region in a way. It's more a middle income region. So with
Mm.
a stronger consumption base that we used to have, when we have a slowdown or something like that. Uh, so my opinion is that consumer in the and it's as the usual thing you see in richer economy. Consumer
Mm.
are the stronger base of the economy, and that has happened in Latin America now.
Right.
We are not, in a way, that 20 years ago we were a much and in a generation we have grown a lot, and we have not catch up the richer countries, but we have grown to become a more resilient region in a way, because also our macro framework is much stronger than it used to be. Where
Mm.
government are more dependent on local currency debt than USD currency debt. You have a stronger independent central banks around the region. What else you have that is different? So a fiscal, well, with exception, but fiscal framework that are relatively healthy, but there's some exception of that, that's a more complicated thing. But the combination of, in my opinion, a combination of a better macro framework has made our economy and our consumer in particular more resilient to the shocks that we used to be in the past.
Right. Speaking of which, Sergio, how are the trade barriers and rising protectionism impacting LatAm economies? You said that a lot of Latin American economies are not too much impacted by the US tariffs. And I think most central bank policy minutes are concerned about this aspect, despite the fact that alignment with the US is not much of a concern. I'm just keen to know your thoughts on this.
Okay, let's say the protectionism. Honestly, the increasing protectionism in the world has been, for the most part, isolated to the US.
Mm.
Not the reaction of the world, except for China, because China is in a different story, because China is in a tick for tack war with the US. But the rest of the
Mm.
world, after the imposition of this tariff, for the most part, the response has been mute. They have not responded in tandem like China. You see, and that has helped the region in a way, because we have not increased our tariff. Well, but for instance, Brazil is a very protectionist country, but that was before the increase in the protectionism in the world. It has been always a protectionist country, and
Right.
Argentina too. But Chile, Colombia, Peru, Mexico were very much open economies. We don't, and we don't pretend to fight a war with a commercial war with a trade war with the U.S. Honestly, it's not the
Right.
intention. Nobody's trying that. It will be suicidal. It will be a suicide if you do that. You see.
Right.
So uh, I would say that so it has not affected that a lot, the pressure in the US, because we are also very much dependent on China, probably more on China than the US now with our trade. So, and China has not increased the tariff to any country except the US or other trade restriction. So, that's the reason why we have to been okay. And the other thing that it will affect us, the increased protection, I will call it the increase of US protectionism, not of the world, is that China uh, definitely will have to lower prices at the same product to other countries, to replace the U.S. consumer, or in partly replace the U.S. consumer. I don't believe they cannot do it completely. It's completely substitute the U.S. consumer, and that is a benefit for us, because if you see our imports, also we are very much dependent on China.
Right.
You see, so it's not, but the central bank concern, and let me now go back to go to what happened with the central bank concern, in my opinion, is mostly with the slowdown of the economy, of the global economy. I would say that's the real concern they have. The global economy will start to slow down because of the U.S. protectionism that has not, so far, we haven't seen it really, in a way. But that was, I would say, is the biggest concern of the central bank. If the global economy slows down, and that will be the channel that will affect us. More than we start to trade war with the U.S. That will not happen. You see, is we have to accept in our case for the except Brazil, probably Brazil an exception. In Mexico too. Mexico, they're both big exceptions. Brazil is
Right.
trying to negotiate something to come down because it's mostly political, nothing to do with any other consideration. And in the case of Mexico, they have not been affected because they have the guarantees of the USMCA. You see what I'm saying? But those negotiations are coming, and that's a source of uncertainty for Mexico when they start to negotiate the trade agreement with the US and Canada. But so far, they have been accepted. They have not faced tariff in a way. They are not because of the protection of the free trade agreement with the US and Canada. You see
Right.
my point? Is for the most part we don't engage in a war in a trade war with the US, except Brazil trying to negotiate down what they impose them. In the case of Mexico, they have to wait, and also we benefit for the supply, how to put positive supply shock of cheaper goods from China, I would say.
Right. Turning attention, Sergio, to one of the new variables to the reaction function, and that is climate risk. In addition to the global uncertainty, I think most central banks across the world are also dealing with climate risk as a major factor. Financial institutions also continue to indicate climate risk as one of the primary channels in the transmission of physical risk to financial risk, and which is impacting asset side, productive processes, and income. This, of course, Sergio, would affect the credit market, and consequently, delinquencies in the region will rise. Given this background, Brazil has been experiencing severe drought conditions in the recent years. How, in your opinion, would the BCB facilitate funding for the sustainability agenda to counter the climate change risk in the near term?
When I saw your question, I was uh, I was thinking more in the Brazilian government, not the BCB, because the
Right.
BCB because the BCB is not in the business. Hopefully, that
Mm,
will take back the region to the 60s, when they were doing credit controls and using the central bank to lend to private company. Now it's
right.
done mostly from the government. So I will talk about the Brazilian government, the potential. The Brazilian, I had no doubt that they're very much concerned about climate. Brazil, and you're right, Brazil has been affected,
Mm,
one of the countries, and Chile too,
mm,
actually. Chile also have been
mm,
very much affected by climate risk. But
yeah.
that is more in the realm of the government, honestly. Central bank, and actually the funny thing about that central bank, kind of like I would say, taking the lead of Europe in a way. They engage in this agenda of the climate risk, and there's some, obviously, you mentioned and they mentioned, and it makes sense that there's some financial risk for the most part. But now, now the Fed is getting out, actually get out. Yesterday, I think the Fed got out of this agenda. And central bank, in my opinion, they will come to realize that that is mostly something for the government to deal with. They can help in a way, kind of like the facilitate things, because they know the banks very well, they can, but that I would say that will be more on the sidelines. No, they are not. They realize they cannot. And don't misunderstand me. Climate risk is a big thing. It's not
Right.
underestimating the risk, but it's
Right.
most dealing. They have government. They have to let the governments deal with this thing, not their bill in the front line of this fight against climate. I would say, you know,
Mm,
because they don't have the right instrument to do it. They can lower rate, but they cannot lend directly. You see,
mm,
they can lower rate because of that, maybe, but also they
mm,
have other goals. What they and the inflation. For instance, the drought, good example of a complicated issue for the central bank because you have higher prices but lower supply. So you have like a negative supply shock. Usually for inflation targeter, the most
mm.
complicated thing to deal with. You cannot
Yeah.
because you don't raise rate because you're concerned with inflation, you don't cut rate because you're concerned with inflation, but you don't raise rate because sorry, you don't raise rate because you're concerned with activity, but you don't
Mm,
cut rate because you're concerned with inflation. You have to deal with a shock that usually central bank they're not very good in dealing with.
mm.
I would say climate risk is something like that in general. It's more a
Mm.
negative supply shock, which they don't have the right instruments. They have to let the governments do the
The
job.
reason why, Sergio, I was asking this question was because a lot of central banks across the world are now sandboxing the idea of
I
a
know.
modified Taylor rule, where you can have climate risk as one of the important variables in the reaction function. And since given the fact that the climate change does have an impact on price levels, and that I think a lot of academic papers coming out of a lot of central banks is proving that point. So,
Yeah.
given the fact
Re-
that Brazil and Chile are both facing severe environmental impact on their macroeconomies, I was wondering whether the central banks, major central banks in the region, are also sandboxing the idea of having climate risk as an important variable in the equation.
no, have no doubt that doing that. But my point is that they don't have the right instrument to deal with. You see, with
Right.
that risk, they have it top of the risk, top of the mind, no doubt. But
Mm,
what they can do really about it is, in my opinion, it's not that much, except that you start to become more development banks and not so
mm,
much central banks. That was a response. But I don't know if you want that kind of response, particularly in the case of Brazil, because if you remember, not long ago, I'm talking 12 years ago, they used very extensively BNDEs to lend to company at lower rate. And the thing didn't go well, because it was very subsidized. It was subsidized for rich people in many ways, rich company. It didn't go well, the
mm,
thing, and now they have restraint to do that because because they realize it's uh, direct credit is very complicated by the state or by the government.
mm,
It's not easy to do well, and usually end
mm,
up in subsidy. The central bank, so that they, in my opinion, it's kind of like an oil supply shock in a way. It's different, but it has similarity. My point is that they can use this if there's suppose. Let's assume that oil double in
mm.
2 months. It's a tremendous risk, but they
Right.
don't match what they can do about it. Is really they can do about how they face that, because it's a classical supply shock which is very complicated to deal with because they don't have and usually they paralyze, if you ask me. They can talk a lot about that, but my impression that they will not really in practice change a
Mm.
lot the interest rate based on that because they cannot. They realize they don't know how they don't have the right instrument to do it, as I said. You
The
see my point?
BCB, yeah,
Hmm?
yes,
No, go ahead.
Sergio. The BCB recently highlighted that there is a greater slowdown in the consumption of more credit-related goods as
Mm.
opposed to consumption of more income-related goods in Brazil. And this indicates that people are probably skeptical about their future income and therefore unwilling to carry incremental liabilities. In your assessment, Sergio, how will this address the upcoming monetary policy trajectory in the country?
Well, when you affect durable consumption, well, you're talking about durable consumption, durable goods
Yeah.
consumption. That is usually that's what you want if you want to slow the inflation. It's engineered to do. It's the monetary policy is working because it's the rate in Brazil is very high. The monetary policy rate, if making the durable good consumption, as you correctly said, that is slowing down. That's good. That's what they need to do to slow down particularly to slow down inflation. Because in the
Mm.
case of Brazil, they have not for other countries in Latin America, but Brazil now has a 3% target, and that's a very tough target for Brazil. They don't have a
Right.
history of being that level. So to get to 3%, they have to slow down more the economy, and that's what they are doing in a way. Keeping the rate high and making the economy to slow down and durable is kind of like the consumption investment. It's similar to investment. And so that's what they
Mm.
need to do. It sounds terrible, but it's a good thing when you want to lower inflation, get to the 3%, and hopefully stabilize inflation expectation. You need to slow down the economy, and it's working in Brazil. And that's because Brazil is very particular. Because Brazil, in many aspects, is when you talk when I remember in the university, closed economy versus open economy. Brazil is more similar to the closed economy, where rates are more important, and you don't have so much slippage from from the trade, from the trade, because trade in Brazil is very small as a percentage of the economy. It's a big
Right.
closed economy. So keeping rate high, slow down consumption, particularly durable, is that what Brazil need to do in order to get the inflation rate to close to the target, and the economy is not close to recession either. So
Mm.
that you have some way to do.
Do you think the Brazilian potential output, Sergio, will be lower than anticipated, given that the economy may actually slow down further?
I'm not so sure. I'm not so sure about that because Brazil has been stuck in a 2% potential GDP for a while.
Mm.
Lower than that seems too low for Brazil, if you ask me. Also, they have gained efficiency in the
Mm.
past. Currently, they have a liberalized more the labor market. The commodity sector is extremely efficient. Brazil
Right.
is a incredible powerhouse in terms of commodities, efficient way to produce meat, soybean, you know, all kind even metals, and oil too, So I would say no. I would say they should stay this way stable, but because it's not. I don't see reason why they can slow the potential GDP because maybe population, but population trend Brazil has been not so bad as a Latin American country. That's another reason. The slowdown
Mm.
in the labor force, but it has not happened really yet in Brazil. So I'm not so sure. I would say more stable in the 2%. I would say that will be my
Mm.
best guess for Brazil long term potential.
The Brazilian policy rate was 2% in 2020, Sergio. However, this has increased to a peak rate of 13.75 in 2022. Again, this rate reduced to 10.5 in June 2024 and now again increased to 15%. So what that means is that among the BRICS nations, after Russia, interest rates in Brazil are the highest. The question, therefore, is that why is the policy rate in the Brazilian economy so volatile? Given the fact that you said that the potential GDP number is at 2% for quite some time now. And is it because of the crisis of that the economy is facing right now, Sergio, or is there some other policy confusion here?
I would say inflation is very volatile in Brazil. That
Hmm.
will be one factor that explains the volatility of the policy rate. It's very volatile, and it
Mm.
has they have taken long while to get to this level, this reasonable level now. 4%.
Yeah.
The
Mm.
2% you mentioned is the lowest ever of the monetary policy rate.
Right.
You see, so let's put it this way: inflation is volatile. Also, inflation expectations are volatile in Brazil. And
Mm.
also you have now in uh, the central bank really want to get the 3%. They're very much set their mind to 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 be on target. They will not get it this year, that's for sure. Maybe next year, I don't know. But the point is that in that, and one of the reasons they hiked so much in this cycle it was that because they will really try to get to 3%, or to people to believe that you will get to 3%. But the other thing that they have a volatile currency, in a way. Yeah, that's
Mm.
important. Is That's also make it more volatile rate. The real has been having in six per dollar. Now it's 5.4, and it move a lot. That's another reason why they have a vola. But I would say that, but Brazil has a history of complicate that is, and also they still. When they did the central bank, I'm talking 12 years ago, when the central bank basically accepted the premise that the government will correct their finance, and it didn't happen. So I mean, for me, they're still living with that kind of problem. So they have to be, more hawk that another central bank has credibility. And don't forget also that the central bank doesn't have really. Well, now, no, sorry, I correct myself. They have a independence, but it's independent by law, not in the constitution. Since the Congress can change that law. So it's very recent. That was in 2019. Before that, they didn't have independence. They have like a operational. They had operational independence, but not formal independence. Now they have formal, but it's very recent. They need more time to have an independent, stronger independent central bank that stabilize. They don't, but that's why they have to react a lot to it. Just it's a mix
Mm.
of volatile inflation, volatile effects, and also a market. I would say if they are not react stronger, they lose very fast the confidence of the financial market. Yes.
So the inflation rate in Brazil is between 4 to 5%, and this is in continuation to when you said that this is one of the lowest rates of inflation that the Brazilian economy uh, uh, is recording at this point in time. Hence, the real rates or the cost of investment is close to 10%. Meanwhile, in Chile, the rate is still around 4.75, if I'm correct, even after the rate cut of 650 bips in July 2025. Why is the cost of investment so high in the region, Sergio? And does this have a detrimental effect on the saving investment cycle? Also, is the inflation problem structural in your opinion?
Mhm. Brazil is. Uh, you put two examples that are kind of like they are the extreme in the region. Brazil is the highest rate in the region. I'm talking particularly the big five:
Mm.
Brazil, Mexico, Colombia, Peru, and Chile.
Mm.
And Chile is the opposite. It's the lowest in the region. So we are no. Now it's Peru actually. Peru and Chile are the lowest the lowest in
Mm.
the region. And my impression that is very much is related to inflation, current inflation, inflation expectation, and history. It's a mix of things. Brazil has the recent worst history of inflation. I'm talking since the 90s. Uh, Mexico has improved a lot, but still the central bank cannot get the inflation to be consistently on target in 3%. That doesn't happen in Mexico, really. for a long while. Peru and Chile are the opposite. They have been consistent in getting the 3% or the 2% in the case of Peru. And they
Yeah.
have benefit, in my opinion, for more stable inflation expectation, stable rates, loan rates, than the other countries. And Colombia is
Mm.
something in the middle. Colombia used to be stable. Now it's not so stable. Like used to have lower rates, now they have higher rates because they have an inflation problem they have not be able to fix, and they have fiscal issues. So complicated fiscal, not so complicated as Brazil, but complicated if compared to the other three countries. So I would say if you put separate you separate the region in these different countries is I would say is Brazil, Chile and Peru more stable inflation, central bank more efficient in getting to the target. Mexico is something in the mix, with a very hawkish central bank on average, and Brazil is different. Brazil is higher rate, higher inflation expectation. Markets are very tough to convince that the central bank will be serious, even though the central bank has been serious, but you don't get but you get the financial market, they don't believe it that much even.
Right. Also in Chile, Sergio, despite the recent rate cuts, which are pretty significant, 650 bips, as we just discussed, the inflation rate remains flat at around 4% for the last
Yeah,
22 months. I was actually wondering why the inflation rate seems to be less responsive to the monetary policy.
you're right. It has been a tough time for the central bank. Honest, we have been stuck in 4%, which is
Mm.
top of the range, the tolerance range, because our tolerance range is between 2 and 4, eh, in the range tolerance. That's what I meant. And the
Mm.
thing is, yeah, but don't forget that we are coming from the worst inflation in Latin America in many ways, if you don't consider Argentina and Venezuela.
Mm.
Our let's put it this way, we are still living through the excesses post-COVID of the COVID policies in Chile.
Mm.
COVID policies, COVID policies, macro policies to face the COVID were like I don't know how to put it, fiscal extreme. Our fiscal deficit got to 8% from nothing, away. It was very, also we have the withdrawal of the rate of the pension fund, which also put a lot of money in the people's pocket, and we have a central bank that took the rate to 0.5%, the lowest in the emerging market, and did some, LRTO, like the ECB. So lend to the bank a lower rate for lending to the bank a monetary policy rate for 4 years. So it was kind of like a conventional monetary policy, which is very unusual in the emerging markets.
Right.
So all the excesses of Chile they were corrected with a very high rate. They took the rate to 11%, but the problem that deflation stay higher because, in my opinion, is that we're still going through these excesses. We are not after 4 years because it was so extreme, the policy response, as the economy grew in 2021, 11%, more than 11%. Our potential GDP is close to 2%. That gives you the sense of excesses, that happened in Chile in response to the COVID pandemics.
Mm.
So now, and my inflation stay high because of that. Another reason why the inflation stay high because we have some kind of riots before the pandemics, and the government fixed the utility prices, and they were forced to because they were accumulating a lot of debt with the companies because of these fixed prices. They to increase tariff, and that also didn't help inflation to get to the 4%. Without that shock, probably inflation in Chile would have been 3% because it was a big shock. We doubled the electric utility bills in Chile in a lapse of 1 year. So that was a big shock to inflation that that now is over. So that's when now we expect to get to the 3% next year for the most part. Because if you remove the shock, this year should have been inflation in Chile should have been 3%. You see my point is, but also it's the lingering effect of extremely expansive policy that make the inflation expectation to stay sticky for our standard. We used to be more a 3% country inflation expectation, and it was not for a while that we were not close to 3% inflation. Forget the not the headline.
Right. So,
You see?
Sergio, inflation pressure, if it continues to persist in Chile, then do you think there is further scope for a rate cut? Uh, because that seems to be a distant dream then. Or you think that the central bank would wait and watch for now as things pan out?
Do you know there's not much scope in Chile to cut now. You know, the central bank is mostly over cutting rate for now. You know, if they cut, there will be one more cut, and that will be it, in my opinion. And also because they're having a discussion about increasing the neutral policy rate, which is
Mm.
the policy that is like you get to this kind of like a paradise where you get the inflation to be close to the target and the economy growing at
Mm.
potential, which is like you usually don't see that, but it's like but
Right.
it's so they are probably they will, in my opinion, they haven't done it. But everybody expecting to do it, increase a little bit. With that, you're mostly done. They want to see now, they want to have hard data, inflation in 3% and not wait. You know, expectations are there, but as you correctly said, we haven't seen that in 4 years, which is a very long period for us not to see 3% inflation. You know, but they are, in my opinion, they're optimistic that next year we will see it because removing this one-time shock of the electric utility bill, we should be seeing inflation closer to 3%. So they don't need more, and the economy is growing okay, slightly above potential. So they don't have no reason to cut rates for a while, in my opinion. This year they have cut only twice actually,
Mm.
and next year we don't see if one cut more, that will be it.
Okay. So talking about the inflation situation in Chile from the macroeconomic point of view, Sergio, I understand that the Chilean commodity exports are powering the GDP expansion considerably, thanks to the demand in emerging markets, especially China. And you did mention that China is the biggest consumer of Chilean commodities. But I reckon that food inflation continues to be a barnacle for the headline number to subside. What's your view on this situation?
You know, you're right that we're having kind of like an investment boom in mining because of these
Mm.
higher copper prices. And that's the only reason, to be honest, why investment is growing in Chile, but
Mm.
for the most part. But the interesting thing about this cycle, and we had this kind of cycle in the past, usually this kind of cycle in Chile come with a very strong appreciation of the currency. And we haven't seen that. The
Mm.
currency has stayed on the weak side. Even if you compare it to Latin America, we can speculate why. But from a macro point of view, is you are not having the classical in the case of Chile or even a lot of commodity producers, because usually you have when you have a big expansion of or you have a higher oil prices, whatever you produce, you have expansion of the mining of the tradable sector, but that makes the currency to appreciate. You have
Mm.
and that is a transmission channel to other sectors that you feel richer. You
Mm.
can consume because you feel a richer kind. We haven't had that thing. So it has been mostly in the mind. You know, we haven't had the transmission to the. That's why you don't see Chile growing at 3, 4%. You only see it
Mm.
growing about 2%, because
Right.
there's no transmission channel. From the mining doesn't hire a lot of people either. That's another classical. These community producer sectors, they are very capital intensive. They're not labor intensive. So you don't see that kind of transmission too. So that's why you don't see this, despite this great copper price and lower oil price, which also benefit us, you don't see a big expansion in the economy. because it's only in the one sector, and the rest of the sector mother fruit, but they don't get this big like a juice coming for the appreciation of the currency. That's what is missing now in Chile. That didn't happen in 2011, for instance. In 2011, we have a big expansion of the mining, incredible higher corporate, and the currency went up so much. It was a big part. Also, you don't see, the other thing, for instance, you're not seeing in Chile, despite the expansion of the mining sector, an increase in the current account deficit. The current account deficit is very small because the because there's no big income effect on the rest of the country because of the
Okay.
expansion of the mining sector.
Okay. Okay. So I asked this question to Javier Guzman of the Banco de Mexico also in a recent interaction. And maybe I'll take your perspective as well, Sergio. In your opinion, would spurring domestic consumption in Mexico help in solving its suboptimal growth? Sort of taking it away from the total factor productivity problems that it faces right now?
So the case of Mexico is kind of like the two economies way. It's a classical story, it's an old story. You have the powerful North manufacturing, which
Mm,
is very productive, and the rest of the economy is not really that productive.
mm,
I would say that divergence is even worse than in the case of Chile,
mm,
because in Chile, our non-mining economy is more productive than the Mexican economy, and our community producer or export, because the case of Mexico is not really commodity, it's manufacturing.
mm,
Our mining is not really as productive as the export sector in Mexico, if you ask me. We
mm,
produce commodities. We export for the most part commodities, and they export manufacturing. That's much more competitive in a way. But we
right.
don't have such an inefficiency in the rest of the economy. We don't have
Mm,
that big divergence like in Mexico. And the average is when you get the two, it's very low in the case of Mexico. But and it's even and even lower if you compare it between income per capita. We are a richer country, so you expect to have lower potential GDP in a richer country than in a poor country like Mexico, and we are richer than them. So it's kind of interesting the story of Mexico that is kind of like is stuck in this equilibrium of two economies, one extremely productive, one non-productive, very non-productive, with a lot of informality. That's another problem in Mexico, the informality. They have a lot of informality. And informality is not really efficient in ways.
mm,
In our case, we have in the case of Chile, informality has increased since COVID, but it's not in any close level to the case of Mexico. And
mm,
the informality in Mexico makes it a more inefficient economy. So Mexico, the same as us and the same as Brazil, is stuck in this 2%, potential GDP, and they cannot get out of that. Even with the funny thing about Mexico, they had this big boom in the nearshoring. Remember, like 2 years ago, that didn't make a dent in the potential GDP of Mexico, which is amazing in a way. You have this big investment coming from all over the world, and you don't see the whole economy growing really most very fast, And
mm,
I'm not so sure consumption is the answer. In my opinion, Mexico has to, improve the informality problem. Make a more formal economy, collect better taxes, having
mm,
a better safety net. Safety net in Mexico is, for the most part, non-existent. People live in is the non-manufacturing economy live in very poor condition with a lot of uncertainty. You see my point? And also they survive a lot based on remittances from the U.S. The relatives in the U.S. help them a lot. Actually that's one of the most efficient social policy in Mexico. The remittances that come from the U.S. So that show a very fragile consumer in a way. The Mexican consumer is fragile and doesn't have a lot of access to credit. You see what I'm saying? Either, sorry, either. Credit in Mexico is not very deep in the financial market to get to. Not so many people with bank accounts and that kind of thing. So they have obviously they have a great market, but it's smaller compared to what it should be with that size of the economy and that income per capita.
I mean, lack of formality is a very common problem among all emerging markets, I think.
Yeah,
So it is not
yeah,
just
yeah, no
Mexico
doubt.
and other Latin American economies. I think it's a pretty common problem for even the Asian emerging markets.
Really.
And that leads to a poor tax to GDP ratio, which eventually uh, limits fiscal muscle
Yeah.
of most of the governments in emerging
and,
markets.
and regulation and some of the good things that government should do well, not overdone it, but should do well,
Right. So, since you did talk about the sticky inflation problem in Chile, uh, what is your opinion of the sticky inflation persistent in Mexico, Sergio?
It's a mix. Usually, in the case of Mexico, it's kind of like interesting because food is very volatile in Mexico. Really, they have a food problem with inflation. Food is you get the tortillas and that kind of the jitomates, tomatoes. That they're very volatile and they affect a lot of inflation. But the issue with Mexico, I mentioned before, is that you don't have consistently get to the 3% ever. In our
Mm,
case, it's only 4 years, but in their case, it's for I don't know, long time, much longer. That one of the reasons why the central bank, in a way, is forced to stay with the higher rates and not be so aggressive cutting rate, despite the slowdown of the economy. You see, the economy basically now is not growing. It's close to 0.5%. You would expect a central bank in that case with a modern framework to cut rate much faster or adjust the level of the rates to a more similar to say the ex-ante rate in Mexico is 3% and real rate is
mm,
3%, 4%, which is very high, for an
right,
economy that is not growing. But they cannot do it basically because they have an inflation target problem because they don't get to the target in a way, and is also they have as I mentioned, financial market problem because rates are not that important because you have a lot of a good portion of the economy that rate doesn't matter because they're not formalized enough to be able to take advantage of this rate. You
right,
see, so it's and it's not it doesn't get to 3%, and nobody see it. If you see expectation, not getting to 3% either. So
right.
even economists and market, they don't believe that they will get to 3%, and that's
Mm,
you're stuck in that problem in the case of Mexico. And also, this cycle has been interesting because also another big concern for the central bank usually is currency,
mm,
the Mexican peso. But that has done well that has been a good figure because usually when the Mexico start to cut, you have a currency problem. It has not happened. They have done well in that sense, and they allowed, but still they are hesitant to really be aggressive cutting policy because they don't really get to the 3%, and nobody believes they will get to the 3%. That will be like a structure more than a cyclical problem in the case of Mexico.
mm. I mean, even I was skeptical that they would probably not reach that threshold, as most of the minutes of meeting are pointing out, and they're expecting it to be reached in 2026, which seems to be quite unrealistic at this point in time.
Yeah.
But I think it's still a pretty
They
evolving situation right now, so I think nothing can be
No,
commented.
but the issue, yeah, they can get to 3%. That the issue, they can stay in
Mm,
3%. That's the question. Not that they reach
mm,
to 3%. They have done it in the past, and for a
mm,
couple of years they've been able to do it. I remember that was in the last decade, but it didn't last.
mm,
That's the problem. But they get to the 3%, but they're not able to keep the inflation at 3%. And
And
you're right. The 3% of the next year they're forecasting doesn't people most the most part people don't believe they will do that.
mm,
They will be able to achieve that. You're
right.
right.
Finally, Sergio, in general, the NPA or the non-performing assets or loans levels in LatAm countries has increased moderately in the recent years. As the global liquidity framework remains challenging, this I think will slow the rate cut cycle in the advanced economies and thereby limit the pace of domestic rate cuts in most of these economies. Do you think that this could prolong financial stresses for LatAm households and firms, elevating risks to credit quality, as we did speak about earlier? And also, how are the regional central banks placed in dealing with this evolving challenge?
It's a challenge. Consumer has, you know, they have in Latin America, similar to other regions in the world, they have been able to sustain the economy by getting, more credit, and that's modern. That's okay. That's good. If you don't overdo it, if you don't do it too much, and my impression across the region that still the situation is okay for now but something to
Mm,
monitor, except in Colombia. Colombia, things look a little more complicated things with that, with
mm,
but in the other countries, in my opinion, we can manage that thing. I know central banks are very much on top of that because of
mm,
the regulation side of the financial stability side
mm,
of the goals, they all have it
mm,
that, and they understand that they cannot get things out of control on that sense. But
mm,
it's a question because it's like you wonder about this, and you mentioned that rates are high in Latin America, but we have
mm,
an inflation problem, and we haven't been able to fix that inflation problem. So that's, in my opinion,
mm,
the reason why inflation is, sorry, rates stay
mm,
too high. And it's something to monitor, but in my opinion, not yet is a problem. I would say probably in 2, 3 years could be more a problem if you start to, stress so much the balance sheet of of the consumer.
mm,
And Brazil is also something to watch. But Brazil is, and it's a, you know, but probably of all the countries, the only country that really have a big enough financial market to be concerned with this, because what tell you about Mexico is also applied to Peru, and Peru is also have a huge informal sector in the consumer side.
mm,
Colombia too, Brazil too. Chile is mostly, they have this problem the consumer more like a because we are the richer economy with a deeper financial market than the other country. I would say
right.
that the other is you wonder about these figures really how they reflect the reality of a lot. It doesn't reflect the reality of a lot of consumers that they don't have really access to financial market in practice.
Right.
You know,
Right.
you see my point is, but yeah, and I know the central bank of my country is really very much on top of that. They publish report and they really care about this thing because they realize that you you can have a monetary policy transmission problem if you have a
Mm,
consumer that's stressed and you you cut rate and nothing happens because the consumer cannot consume more basically.
right.
But I
Right.
would say something to watch for the next 5, 10 years, but not yet.
I agree. Well, that's all I have for today, Sergio. Thank you again for
Thank
being
you.
part of the show. It's always a pleasure to hear your views on the region. Thank you very much.
Uh, Thank you for inviting me, Karan. And I don't know, you'd let me know we can do it again. I really like your questions were very interesting. And actually, I usually more follow one country other. I like
Mm,
to think about the whole picture, not about just Brazil, just Mexico. You see,
mm.
but I appreciate your invitation a lot. Thank you.
Thank you, Sergio. It was an enlightening discussion. Thank you very much.
Thank you very much for your invitation. Have a good day. Bye bye.
Thank you. You too.